This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the continued support and for tuning in. If you like what you hear on the Planet MicroCap podcast, please take a moment to rate us 5 stars on Spotify or Apple Podcasts. It really helps more folks discover the show and join the MicroCap investing community. Registration is now open for the Planet MicroCap Showcase Toronto in partnership with MicroCap Club, happening October 21 through 23, 2025 at the Arcadian Loft in downtown Toronto. Whether you're a seasoned investor or just getting started, you'll want to be there. Visit planetmicrocapshowcase.com to register, and I'll see you in Toronto. My guests on the show today are Anthony Perala and James Hannack, research analysts at Punch & Associates. Anthony and James recently returned from a multi-city due diligence trip across Western Canada, and in this episode, they walked us through what they learned, not just about specific companies, but about the power of seeing businesses up close. We talk about why in-person research still matters, especially in microcaps where management access, company culture, and operational visibility aren't always obvious on paper or on a Zoom screen. They share how walking factory floors, reading body language, and noticing office details can shape conviction and surface red flags in ways spreadsheets simply can't. Anthony and James also explain why Calgary and Vancouver are becoming regular stops on their research itinerary, how they prepare for and structure field visits, and how they filter insights once they're back at the desk. We also cover common pitfalls, lessons learned, and what separates candid management teams from those that are just giving the IR version of the story. If you ever question whether boots on the ground research still adds value in today's data-rich environment, this episode makes a compelling case that it does. So thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Anthony Perala and James Hannack. Anthony and James, thank you for joining me today. How are you doing, guys?
Hey, thanks, Bobby. Appreciate you taking the time to have us on the podcast. We've been listeners for a long time, so excited to be on here with you.
Heck yeah. No, I appreciate it, man. And it was great meeting. I know you couldn't make it to Vegas this last year, but, Anthony, we got some good hang time there. So this is, I was stoked to bring you guys on here because, you guys hit me up and said you were going on this pretty due diligence trip in Canada for a few days, 4 days, I don't know how many days it was, but anyways, But what was super interesting about it was, we cover on this pod, and you guys longtime listeners and anybody who's listening in here, we talk a lot about due diligence and meeting management, potentially going on the ground to the company's facilities, their offices, headquarters, kind of see how just the meat and potatoes of everything, but we never really done one or a show where we've kind of done one in pseudo real time. We're recording this on Monday, June 16th, 2025. And, you guys just got back from this trip. So I thought it might be kind of cool to do like really all the nitty gritty of what goes into, doing those on the ground due diligence meetings, which is a little different than coming to like a conference, for instance. Sometimes you come to our conferences, you'll be inspired to want to do some of that on the ground due diligence, or for some folks, it's great. I just was able to meet management at the conference. That's great. That's all I needed. But for other folks, you want to go and do site visits and all that kind of stuff. Sorry, wanted to give that kind of background and preface before we dug right in. But, before we get into all of that, I mean, real quick, love to hear your guys' backgrounds, your desire and passion. It's one thing to be excited about doing investing, and then, now you're like, wow, I love this so much. I'm willing to go to Podunk, wherever the heck it may be, to go and do a site visit. So, love to get your guys' background, how you guys got passionate about, investing, and then of course in microcap. So Anthony, we'll start with you and then we'll go from there.
Yeah. So I joined Punch in 2021. I had more of a circuitous route to get into the seat, but I had a background in credit research. I have kind of your typical story of a Midwest kid who finds out about Warren Buffett at 18 and then really falls in love with investing. So read all the books I could get my hands on, knew I wanted to have a career in investing at some point, but growing up in northern Minnesota, didn't have the best network or connection or kind of the idea of how to get there. So went to small college in northern Minnesota, or master's program at Villanova University, a career for 5 or 7 years research, which was a really good base, the balance sheet. Didn't give up the love for equity investing in microcaps, maintained a gay, and as it so happens, when our opening was at Punch in 2021, we had overlap in a lot of microcaps at the time that I was able to talk somewhat intelligently about, enough so that they gave me a call back and stayed interested, thankful for me. So yeah, and been here for 4 years, and it's been a great experience, great place to work, get to sit by more passionate people every day, and continue to look at really interesting microcaps, both in the US and in Canada.
Very cool. James?
Yeah, it's funny enough, Anthony and I have rather similar journeys of getting interested into investing at a young age, going to college for that with the focus of wanting to get into equities. But at college was working as a credit analyst for a regional bank, and then but in my free time, was following companies, keeping a PA, listening to earnings calls, digging through filings, things like that. I always had the love still for the research. And so then, stumbled on the application for an analyst role at Punch and Associates. Seemed like there was a lot of philosophical alignment, myself and their philosophy. And somehow, some way convinced them to give me an interview, and just the passion for investing, I think, stood out and got a job. So also lapping 4 years here with Punch and Associates.
Very cool. All right, so let's get to the task at hand. So you guys, like I said, you guys hit me up and let me know that you were doing this trip, and wanted to kind of do a whole pod, really not just talking about your trip. This is not going full like story time or anything like that, but we thought it was kind of cool, like I said, to kind of go through the process of, okay, now we're ready to go and do that. So I kind of separate this thing into 3 parts. My part 1 is the pre-trip, putting the thoughts together as to why 1, you need to do the on-the-ground due diligence is important for you guys and your fund and your process. And then secondly, what are some of the things that you do prior to saying, all right, we need to make a trip, that inspire you to say, all right, I think it's time for us now to think about making a trip to meet all these different companies and management teams? Ooh, you guys, go for it.
Yeah, I'll start off for us. And so from like a higher level, we probably, whenever I have an intro call with management teams, I'm giving a little bit of background on the process. Something I lead with is, I think we qualitative aspects a little bit more than peers. We, of course, are going to look at valuation fundamentals, but we really are focused on finding management teams that we trust to move the business forward over the next 3 to 5 years. And developing a relationship with them is key in that. So even not absent this trip, each of the 4 analysts on the team are probably traveling 3 to 4 times a year, whether it's to Planet Micro when I was there in April, or other conferences. So we'll meet management teams there. But then anytime we're in a city, whether it's for research purposes or marketing, we'll try to line up 3 or 4 meetings outside of the conference. And we feel like you can get a unique aspect into how management teams operate, how the company operates, visiting them on their home turf. If you're at a conference or else it can be a little bit more rehearsed mode, a little bit more, but a lot of insights, just how updated are the offices? Does the CEO walk through the halls? Do they greet everyone that they see, or are they kind of breezing by, seem a little bit separated from the rank and file employees? There's a lot of little nuances that you pick up on over time that is instrumental as you're building out just your framework of who these people are as managers, operators, and people at the end of the day. And then looking at, why we went to Canada is probably over the last 2 to 3 years, not to overuse an overused saying, but thinking of fishing where the fish are, but rather than where other people are fishing. We've found a lot of attractive situations in Canada. We're value investors at the end of the day, so a lot of like businesses with US peers are going to trade cheaper in Canada. Obviously, we're not going to buy them because of that, but we found a lot of really good valuations, really good management teams. In lots of cases, it's a business that does as much, if not their actual operations in the US versus Canada. From a high level to it, kind of a prototypical Punch holding, we own a lot of, I use it as an endearing term, but boring industrial companies in the middle of the country. And going to Western Canada, you kind of recreate some of that feel. It's a little more unloved than Toronto. And I feel like you get a little less polished management teams, and I don't mean that in a bad way, but more willing to give you kind of how things really are going rather than the corporate speak and the IR kind of polished view of the world. So that was one takeaway James and I had after what I think 10 meetings total over 2.5 days is you could feel for how the business is for 45 minutes to an hour teams.
Yeah, I just really emphasize that candid conversation, both in why there's a benefit of meeting companies at their headquarters rather than just at conferences or Zoom calls. Not that both of those definitely have their place and are beneficial, but it's a different dynamic and allows for more of a real conversation with the management team about their business. It's less IR work. They feel, I think, probably more comfortable talking about not just what's going right, but also what are some challenges and things of that nature. And then for Canada specifically, it does feel as though a lot of these Canadian companies and managements, they're not in front of investors as much. And so they have less rehearsed just personality and temperament. It seems much more like that middle of the country, not being promotional versus trying to just sell you on buying their stock. And so I think it's really that candid conversation that really helps with doing in-person visits and getting that transfer back from those Canadian management teams.
So my next follow-up here, and this is really wanting to get at the meat and potatoes of it, is, when you decide to go on a trip like this, any kind of business trip in investing, with a conference, whatever, doing on-the-ground due diligence, what I really want to better understand, at least from your guys' perspective, and for this trip maybe in particular, for folks to get an example, what was that main catalyst where you finally like, all right, we got to do this. Let's make the case to the firm. Like I said, like any individual can just go off and, at any given point say, all right, I got to go do a trip, maybe turn into family vacation, whatever. But, you guys are working for a firm, good size firm, good size assets under management. You got to make the case to the powers that be, like, hey, we got to do this trip. What was that main catalyst that you're like, all right, guys, this is why we got to do this?
Yeah, I can start out, Anthony, fill in what I missed here. But I think it largely came about, we were getting to the point where we had 2 or 3 own names in Calgary that we hadn't met the management team in person yet. And so that made it really easy to say, hey, we have this one central area where there's 2 or 3 owned companies where we'd like to meet the management team. And then you run a screen for other interesting names, or look at our watch list of other names that are kind of on our radar already, and figure out that they're based in Calgary. And so then it's going to the PM and saying, okay, hey, we have 8 names that are really interesting, a good combination of owned, watch list, and brand new names. Think that we can put together a productive trip by going to Calgary. And then from there, we noticed that flights from Vancouver to Calgary were very reasonable. We had another owned company in Vancouver and another very interesting watch list name in Vancouver as well. And so we pitched that, hey, we could just make a quick detour there, do those 2 meetings, and then head over to Calgary. That was largely what brought it to the forefront. I don't know, Anthony, anything you'd want to add?
Yeah, I would just say it kind of bubbled to the surface more last year. We had kind of tried to do this last year. We're a little late in scheduling, couldn't get enough, a nice mix of owned and watch list companies for August. So in the kind of intervening 12 months, had more Canadian ownership throughout the portfolio. We have a couple strategies that vary between 10 to 20% Canadian. We have, I think 3 years now, we've had people go to the Fairfax meeting in Toronto in April, do a kind of a Toronto trip there. So it really made sense to then check off the Calgary side of things. So I think it is hitting a certain level of, like you said, there's priorities that need to be made for travel. There's not an endless budget. So it got to the point where I think going to Calgary could be more productive than if we go to Dallas, it's at once during the year. How many owned companies could we see there? Or Ohio area, someone from our team went there earlier or later last year. So I think it's gotten to a more meaningful percent of the portfolio that it can be treated as a regular rotation on our kind of research and travel budget.
No, for sure. Because I would imagine, the case to be made, like you guys are based in North Minnesota, right? You're in Minneapolis, right? Yeah. I mean, it's also an easier case. Like, all right, we're just going right over the border. Calgary's right here. Vancouver's right here. But versus, all right, okay, we want to go to Italy, or we want to go to London. And check out.
I need to go visit some reinsurers in Bermuda.
Yeah, exactly. You're just like, all right, obviously no one's just trying to get one over on the boss or anything. We're not trying to say there's anything malicious or that would be the intent, but it definitely makes it much easier, even if it was still just the 3 names to go to see in Calgary, you're like, all right, this is an easier trip. You can make a day trip out of that almost, versus overnight and all that kind of good stuff. But last part of like kind of my part 1 and thinking about, pre-trip, what would you say? I mean, you can name the names if you want, or it's up to you. But what were some of the things that you were in your mind thinking, these are the things we really want to learn or glean from just being there in person? You kind of mentioned a few of them, obviously, like seeing how the CEO acts with employees and seeing how they are when they let their hair down a little bit. They're not in the suit at a conference in a one-on-one kind of with the rehearsed notes. But was there anything else in particular that, can be specific to these names? Or just in general that you're like, this is some of the things we want to take away or at least learn from.
You can cover my own name in Vancouver, but you can start if you want.
Okay. I think broadly it's a good, so about half have some type of energy exposure. So I think this time that going when we did, was good to just check kind of temperature on how they're feeling with kind of different moves that are happening geopolitically. And Canada has some unique aspects with their first LNG project coming online later this year. So it was good to get just a tenor for Calgary's, I think kind of sometimes referred to as like the Houston of Canada. It's a big oil and gas center. So for about half of them, it was interesting to get just a feel for what the industry temperament was. I went to the Intercom conference in Denver last summer and had heard from a couple of people that it was feeling like the early 2010s in Calgary again. That was kind of getting some momentum back. So it was interesting to see the city from that perspective. Calgary did impress us both for having no opinion of the city. It beat our expectations there. So that was one thing we were looking for. And then also I think just broadly, anytime we're on the road is trying to, you usually will have a varied range between sitting down with a $100 million market cap company and a $3 billion market cap company. And you can compare them, but I think it's also, you're not going to expect the same from those two management teams. So it is going in with a thought of how do they fit the role that they're in? And then could we see them managing the $100 million management team? Could we see them managing a $500 million company, $3 billion company? Could they be a CEO of a $10 billion company? So I think that was kind of one theme that we were looking at throughout. And I think it's a blessing and a curse for fishing in this pond, but Canada does have a reputation for being more of a retail driven market than the US. So then judging it in that respect is kind of just how would this CEO management team face up under more institutional scrutiny, more institutional attention.
And I can talk a bit more about a specific name. We own an optical company that's based in Vancouver, Canada. And it's founder-led. And we had met with one of the co-founders pretty consistently, but we hadn't met with one of the other co-founders yet. And so this was a good opportunity to meet him for the first time in person and really get his higher level, larger kind of vision for the company. The co-founder that we had met with it is more the blocking and tackling side of the equation. This founder, then it's the CEO. He's much more the visionary and driving force. So it's great meeting with him. Then we also got to do a facility tour of their manufacturing plant, and that was really impressive to see. Got a lot of insights on both. It'd be pretty tough to just try to start a company like theirs from the ground up to invest all the capital that's required in building that facility, but then also seeing, there's plenty of room for efficiency investments, automation investments, things like that. So it was a combination of getting a chance to meet with a key person with the firm, along with going on that facility tour and getting a better handle of just how the nuts and bolts of the business works.
For sure. And we won't name the name of the company, but it might rhyme with. No, I won't do that.
No. I think everyone a lot of breadcrumbs there for that one.
Yeah. If you follow MicroCaps, you definitely know what they're talking about. So you're kind of starting to get into kind of what I had as my part two is like the actual trip itself and being on the road. Mm-hmm. When you're in these meetings and you're seeing the facility, let's use that one for example. I've had a number of folks that have gone on that similar facility tour, and everyone comes away just like, wow, that's super impressive. It's a feat, right? For especially mm-hmm. what they're doing. How do you separate out? Because we're all human. We can easily get caught up in the. I mean, I don't know. Maybe majesty isn't the right word, but in just the whole totality of it.
Show.
Yeah, the dog. Yeah, just kind of getting caught up and like, wow, this is sick. Like, oh my god, do you see how like the rotor got caught up with this thing and then all that? It's so easy to get caught up. I remember when we went to Ian's event back in 2024 when Idaho Strategic, and not a shareholder, but when we went to the mine visit, like it was awesome. It was just mm-hmm. awesome, going in and seeing how everything's made, getting the gold, the mine shaft, and it's just so cool. So, how do you separate out that natural human emotion of this is amazing versus trying to be objective of like, all right, is this actually being run efficiently? Mm-hmm. Is there any cracks in our thesis based on literally what I'm seeing here? So I'd love to hear your guys' thoughts on that.
Yeah, I can start out here. A few thoughts on that. First off, right away, it helps having more than one person going on the trip, and so after each meeting, and in this meeting in particular, Anthony and I would discuss back and forth things we saw and thought about it and took away from it. And so that can help, fight against those natural biases of getting really caught up with the dog and pony show, in the moment. On top of that, a lot of this business is just benchmarking. And Anthony and I have both been on a number of facility tours. And so you're able to look at what they're doing and compare it to, different manufacturing plants that we have seen before, and comparing and contrasting their levels of automation versus others that we've seen, just how full the facility is with equipment versus ones that have been more full or less full, how organized are things, how clean are things, So it's just taking a lot of these different data points and comparing them with different data points that you've seen before, and focusing on that objective view rather than just the excitement and fun that we had while being on that tour.
Anthony, you want to add anything there?
I just say it helps that we go in with the thought of, it's not like we're experts in the manufacturing process and we're going to be able to like pick out things that either like, oh, I can see what you're doing here, I really like that. It's more just kind of taking it at face value. And I think for me, it helps disconnect it from just being numbers on a screen or a story that's kind of being told. You have more of a real world thought to it. So in a hypothetical world where there are operational challenges, or even like they have some huge lifts to take costs out of the system, I think you can have a greater appreciation for the actual running of the business instead of just the stock did X or the stock did Y. And I think it all circles back to building that relationship. I think they respect a lot making the overture to go travel to them, being interested to see what their life's work is. And when we're looking at it and trying to build a 5+ year relationship as owners, I think that's some of just table stakes of lifting up, doing the lift that we can on our parts and kind of meet them where they spend the majority of their time.
Absolutely. No, that's great. So, similar-ish question for, let's say you're not going to a facility that has, the full, let's say you're meeting some energy companies where, yeah, you're still going to the headquarters, but you might not see exactly how the sausage is made. It's just more like, this is just corporate headquarters where, most of their employees are based, and then kind of the real work is still somewhere else, more remote or whatnot, and you hit on a good point about, these management teams are, listen, they're stoked. They're like, not only are you guys interested in our company and wanting to maybe take a position, build a long-term relationship here, but from this Punch & Associates is a reputable, amazing firm, right? I've interviewed Howard and Paul over the years, and so I would imagine that it's also tough for you guys, even in those interactions of like, trying to whether their excitement versus like, hey, we're also here to like, we don't want to hear just your best foot forward. Like give us kind of the real, what is actually going on here, well, good, bad, and different, so what are some of your strategies to really pull that from them when you're there, they're excited, all that kind of stuff? What's some of the things that you try and do to pull out some of the more real of who they are and the realness of the company? Either one.
I have a couple thoughts.
You can keep going.
Okay. Yeah. So a couple of things. One, I would say, again, go back to the benefit of having both of us in the meeting, is one person can be asking the primary question while the other person can be listening to the answer for good follow-ups, and then asking that critical follow-up. It's every CEO will tell you that their stock is undervalued, and then you can ask that critical follow-up of, oh, okay, that's interesting. Then how do you think through that valuation framework? And what do you think is appropriate multiple and why? And so you can translate that to they could be really excited about some sort of new product line, but then ask that follow-up of what's gotten you excited about this? How much capital are you investing into it? And some of those derivative questions can get into, are they really serious about this? Or was that just more of a canned line? And that they're actually thinking through this, really investing in it. We had one management team talking about how they're entering a certain area of a business doing financing for their equipment because they were concerned about maybe losing deals to competitors who offered financing that they themselves weren't. And then later on in the conversation, asked the follow-up, how many deals do you think you guys have lost thus far about not offering that financing? And then they mentioned, well, we probably haven't lost too many. And so it's asking follow-ups like that to try to get to the real truth behind the matter.
You're like, oh, just not too many, huh?
Right,
Nice. Anthony, you want to add anything to that? It sounds like James is the way. Like I'm already imagining you guys. It sounds like James is the one asking the question. Anthony's sitting there quiet, like, all right, okay. I'm reading the body language here, seeing what's going on.
Yeah, I'm not. I wish I was a little bit of a better body language doctor, but we just generally will kind of split them up like half and half. Like that will be the point person on, and we generally know the names well that we can contribute, but we'll have kind of split it up that way. I think no, just being prepared going in is a good barrier to that because you never want to get into a situation where you make all the effort to get there and then you're just basically quasi flipping the IR attack. I think being able to have just and management teams respect that more than anything. If you can ask them real questions on their life's work, I think they love nothing more than just talking shop for an hour plus. So I think preparation is the best defense against that because they also know they're like, okay, I can't really BS my way through this. If I try to paint the world with rose-colored glasses, I'm gonna get called on it. So that's one thing, and that's what I would say. Yeah,
For sure. And also like it definitely helps with, one thing I've noticed in my, small career here in doing interviews with I'm going to be specific when I say this, non-resource Canadian microcap management teams. I'd say I don't want to paint too much with a broad brush here, but on the whole, they usually are much more candid, for the most part, kind of giving the real deal of what's going on in business, not just kind of, everybody likes to sugarcoat the bad stuff in some ways, but it definitely helps also that it happens to be a swath of management teams that are usually like pretty candid for the most part, right? Like, and kind of just tell it like it is. I mean, what are they trying to hide? They're a public company. They can't hide anything, I mean, there's obviously non-public things that they can't talk about, which, hopefully they know that. But on the whole, like they kind of they get it.
Yeah, absolutely.
Yeah. And we definitely emphasize what you said about we feel that way too with the companies that we're talking about from Canada for the most part are much more candid and transparent with both what's going good and what's going bad. Makes it easier.
100%. Was there any, I mean, again, you can name companies or not. It sounds like we're still, you don't have to name names if you don't want to, but I mean, was there anything that surprised you or information or that you learned about or after meeting with management and doing the tour, anything like that you're like, oh, that's interesting. That's information I didn't expect to find or I don't know. Do you have any examples like that? Again, you don't have to be company specific, especially if it's someone negative. Or I don't know. You take it. I asked the question. Take with it what you will.
I'll give one example. It's just kind of more of the mosaic rather than like a direct takeaway from a company. So one company we met with, it was our first meeting in Calgary. It was probably a little south of the city in like an industrial park. So you're going there. It's an oil and gas services company. I'll just leave it at that. And then you get there and based on your typical, I just say, you could have told me I was in a Minneapolis suburb industrial park and I would have thought that's where I was. So it felt right at home. You get in, you're like, wow, these are actually really nice offices. Like, looks like they've been updated. We sit down, kind of make just kind of small talk to start off. They updated the offices in the last year or so, doing the rest of it coming up. James had made a really key finding kind of on the flight from Vancouver to Calgary when he was doing some research that their share-based comp was up a little bit the last couple of years. So that was kind of something, and his antenna was up, asked about that at the end of the meeting. Thankfully had to use the restroom after our meeting, so got to walk through the rest of the offices. And it was fashioned more like a tech company than a sleepy oil and gas services company, which isn't, it's not like we're going to go sell the company tomorrow but just it adds to the framework of something to watch going forward. It's like, okay, how tight our expenses are we now? Are we feeling a little bit more like a tech company rather than a kind of data analytics company servicing the oil and gas industry? So I think not to just be a broken record, but we've already owned it for 3 years. If we're owning it for another 3 to 5 years, it adds something to just continue to monitor. And I think is a key thing in a lot of these meetings of companies that we own is just building out that continuous maintenance and due diligence that you have. And it adds a new wrinkle that you're not going to get on a Zoom call. It's kind of been a blessing and a curse that we could find a new company today, be on an intro call by the end of the week. But also I think there's that aspect of being in person that you can pick up on different things like that.
Yeah, I would say, and kind of that general mosaic, another thing was just kind of the general sense around Canadian energy production. I'm not going to pretend to be an expert on Canadian politics, but we heard from a variety of different sources that there's a little bit more hope that the regulatory will be a little less onerous going forward. We had one of our E&P producers talk about how they're very familiar with the new head of energy in Canada, who was coming from Calgary, and thought highly of him, and we're hopeful with just kind of the movements on that front. And we talked with a number of companies who some would benefit from more stringent regulation, some would be hurt by more stringent regulation. And pretty much all around it was this idea that the regulatory framework feels to be headed in a different direction than where it had been. Now, who knows the magnitude and timing of that, but it just felt like the general pulse was that way.
Interesting. Yeah, no, that's pretty interesting right there. Look, I would dig more into it, but I'm not going to pretend to be an energy expert myself. Like, if we're going to do that, I got to get Josh Young on here. All right. So I got to hit up my boy if we're going to go down that road. But these are insights that you probably would only get if you actually are on the ground in Calgary and actually being able to talk to multiple sources, multiple people, and kind of all that. I mean, not to get back to one thing, Anthony, you were saying about when you looked at the offices, is that something that's an interesting thing where, you go in and like, all right, we're going to meet, oil and gas services company, or we're going to meet a consumer eyewear company. I think we all have these expectations in our minds of like, well, what is this office is going to look like? Like, is this what we think it should look like? And what does that then mean for how we're putting our thesis together? How do you marry those two thought processes of like, all right, what we're now actually seeing, does it fit what we think we should be seeing? Is that a flaw in our own bias or thesis? How do you guys think about that?
I think that's a good point. I think it's just one input. It probably would be more of a worry if we did a proxy review, already saw some red flags, and then you go and it's just an opulent office that it looks like that would be more of a worry. Here, it's not. It didn't rise to that level. It was more of a something to tuck away for later. But that is a good point. There is also, you have to kind of just check what is reasonable. James and I'm going to mention, James and I both visited this office, but there's one company that we've done a site tour on where it is like, I wouldn't say decrepit is a bad word, but it is like way past being frugal, where you're like, you need to invest something in here. So there's a fine line of, we don't want that end of the spectrum, and then we also don't want like super opulent. So I think it's more just one input into the overall way we would view governance and how they spend.
I mean, but that is probably one of the key primary inputs for doing a trip like this, because that kind of has a big, I guess you'd say, just chain reaction. Like, all right, they got, pardon my French, they got shitty offices, but it's but like, what does that say about culture? Like, do people want to come work here? And, what's the employee turnaround now as a result of the fact that, they have to trudge their way to this decrepit, SHIT hole, every single day in the middle in minus 30-degree weather in the worst part of the year, like that,
Yeah.
that's why I asked that, because for me, I would be thinking, all right, well, are these employees happy? Like, I mean, yeah, there's pay, and that's all a very crucial part of this too.
Yeah.
But, if they have to go into the office every day, if it's just, if this is the existence, not to say that everybody has to be like, have their own Facebook meta campus or anything, but
Yeah.
you know what I'm saying?
No, totally. I mean, I think now it's an even more interesting question, just given the work from home and hybrid work dynamics of as companies are on their own journey of going from a certain level to maybe going to a different level with that. So totally agree that it's probably a pretty wide band of what's acceptable and reasonable for an office. You want to be able to attract and retain talent. But also there are, certain things that are can be a bit more on the frivolous side, and you also the other company that Anthony was talking about can also be on the flip side. So I would say it's a wide band. It's mostly just a data point to then tie it into if we see or hear anything else that would maybe fill out that picture a bit more. But yeah, just kind of a data point at this point for this company.
I like your pushback though, Bobby, because we would all admit to being value investors. I think you could paint a picture of your average value investor tends to be on a certain level of the frugality scale, and then would then tend to say, I wouldn't spend X amount on this office, so therefore this company shouldn't. But I think you have a nice kind of alternative way to look at it. It's like, okay, well, you also want employees. How are you going to attract employees that want to come into the office more often than not? So I think you have a nice flip of the coin of like, yes, it looks nice, but what is their turnover rate like? Are they attracting top talent? Is that why they've been able to outperform and get certain market share levels? So I think that's a really, really nice other side of the coin.
Yeah, for sure. But at the same time, you're right too. It's just that balance where it's like, all right, that's part of the reason we go on the road and do these things and see what the actual existence is like for employees, because these management teams can talk to their blue in the face at conferences, on interview, whatever calls. Corporate culture is amazing. Our culture is great. Like, we've had employees that have been here for 10 plus years, but it's not until you actually see what the actual work environment is that you're like, all right, well, does that employee have no, what's, you know what I mean? And also at the same time too, like with James, you made a great point too there about work from home, right? Is that, yeah, they probably have, you have a number of employees that can probably do everything from home, but if you want to get them to come to the office because more things will get done, it'll be more efficient, how much are they investing? And also it's a capital allocation play or conversation too of like, all right, are they able to like make the environment nicer without, going full like New York Wall Street ridiculous, That's, I mean, it's small stuff, but like that's why you do these things.
Absolutely, yes. Mm-hmm.
So all right, post trip, you guys get home. It's an amazing 4 or 5 days. You didn't get sick, hopefully. Didn't get COVID.
Yeah, no,
yeah, it's still a couple days. So now what? I mean, we can get specifically on this trip of like, maybe there's names you're like, all right, sell everything. Or is it now, all right, let's break down all of our notes. Let's break down all of our conversations. Let's plug in the inputs. Let's see, is it now buy more? Is it a hold? Or, what's usually your post-trip, workflow?
Yeah, sure. Yeah. So a few disparate thoughts. Starting off with maybe just framework, how we tend to handle things is when we get back, we'll send out a summary note that's just 3 to 5 bullet points on each of the names that we met with and kind of rank order how we thought about them and kind of the tagline of buy, sell, hold with that name. And then, as time allows, we'll write up the full note. And in each of those iterations, we'll talk with the PMs about it, our thoughts. They can ask us questions and clarify. When we're writing up those full notes, it's also just double checking information. One example, one of the companies we met with, there was some confusion around if share count was increasing or decreasing over the last several years. And me and the IR might have been talking about 2 different time periods on there. And so he had talked about share count decreasing, and the time horizon I was looking at, it was actually increasing. And so making sure that, the information you got, you're kind of double checking some of the stuff there, so the PM has the accurate view of what's going on. So yeah, and then, once those notes get out to the portfolio managers, they'll dictate priority of notes that they want written up, or additional work, or if we want to make a trading move immediately. I think coming out of this trip, we had 1 or 2 names that there's maybe a little more urgency on than when we had first went into the trip. And so we're, doing that accordingly at this point in time.
Yeah, just it's like James just said, having a concise view of if we want to add to it, and then new names. Kind of time ends up being one of our more precious resources. So are any of these new names worth spending more time on? Some of them were almost completely new prior to going to this trip, and do we dive into it more? Ones that have been on the watch list, I think some of these meetings help guide to what strings to pull next. So it kind of communicate that, and yeah, it's really, I think that you could bucket like the 10 holdings or 10 names that we visited. Probably about 5 were existing holdings. So continue to think through of just building out that long-term relationship. A couple we probably maybe are on the back 9 of, and kind of getting an idea of, is this a management team we maybe trust long-term, but just now it's not the right time? Do we keep it on the radar? And then the new names, just does it deserve more time? Is kind of how you could bucket the between the 10 holdings.
Very good. I mean, is there anything that you would have done differently, on this trip, or, companies, or more companies, less, like, how do you feel overall in terms of, how time spent?
That's a good question. I'd say right off the bat, you're going back through your notes, and you type them up, and there's obviously follow-up questions you think of. It's like, oh, I wish I would have asked this in the moment, but make a note to ask the next time we're talking about that management team. I think that with Calgary, the city is really condensed, and so one of the benefits we had is, we could just walk to meetings, and they're 5 minutes away. So we maybe could have seen even more companies on our primary day that we spent there. It's, making a note for next time that feel free to add more watch lists or potentially interesting names to fit in the day. I don't know, Nathan.
There's one, and this is more just the kind of like arcane to us. There was a manufacturer that has offices in downtown Calgary, but their manufacturing facility is like an hour and a half north. And they made an acquisition recently of another company that's an hour north of that. So my biggest disappointment from the trip is that CEO was pulled to help with that integration stuff at the site. In a perfect world, we would have spent a half day, been 2 hours north of Calgary, been able to tour their site, maybe even go to the place that they acquired. That would have done a lot more, just kind of the life cycle of that holding, then a boardroom meeting with the CFO. So kind of it's the balance of, let's not spend a whole week up here, but then also spend enough time. So it is in a perfect world, we would have had probably half a day more. And looking back on it, yeah, that's probably the one takeaway I would have. That's a good one.
Yeah, no, that's a really good one. What's also some of your follow-up with management post-event, or they now, I know some CEOs that, especially after a conference, they're like, what's the stock doing today? Oh, I didn't do anything else. The stock is up. Oh, didn't do anything else. Volume. Oh my goodness. Stock down. Oh, that's your fault. But I mean, that's very rare usually when that. But I mean, for you guys, like, what is some of that post-event communication now with management? I would assume probably some that aren't portfolio names probably, are like, okay, what's up? Like, what are we doing? What do we do now? Like, do you guys tend to follow up with obviously thanking them maybe for their time at a minimum, but are there others that you follow up with about, just being candid with them about like maybe why the thesis isn't working out for you guys, or on the positive side, be like, yeah, no, we really appreciate the trip. It actually confirmed a lot of things that we were thinking and went and made a larger position. I don't know. What's some of that post-event communication like? How candid are you with them?
I'd say probably, at least I can think through most of the owned companies, that's a way that we'll kind of wrap the meeting almost, kind of put a summation of like, oh, we've really enjoyed being shareholders. We really appreciate X, Y, and Z. And can kind of point to things like previous discussion. So I'd say it's usually not an immediate one, but then the thought of some of them we're seeing a couple times at conferences, or I would say not all of them are reaching out after every quarter, but we have a regular cadence to our discussion and have for a couple of years. So we know that if something pops up, we can reach out to them, and vice versa. If they see something, to reach out to us. Newer names, that's a more of a gray area. I say I'm not, at least personally, I usually don't reach out kind of with the thank you afterwards, but kind of end a new meeting with just I'll tell them, hey, we remain interested. It could be anywhere from 6 days to 6 months to 18 months between when I first talked to you and if we put it in the portfolio. So I'll likely reach out in a quarter or two and we can chat again. I don't want to monopolize your time, but I want to keep it there that we're interested. We really appreciate it. Yeah, that's kind of the two outcomes I would say. James?
Yeah, I would say the meeting is kind of bracketed with, especially those watch list names, kind of an introduction to us at Punch and Associates of us being long only, long-term focus. We have longer than average holding periods, and so the canned joke I like to make is we can date a little bit longer before we get married to a company, and so that what we're talking now, there might not be an immediate by just following this meeting, and we'll reach out in the future, after an earnings call or something like that to keep the conversation and research process going. And then at the end, going out of the way to really thank them for their time and their hospitality. And so I would say not often is there a hard email follow-up right after, but for sure, if there's outstanding questions or things that, like I said, if there's a follow-up that I didn't realize to ask during the meeting, I'll reach out to IR or the management team and just ask, those couple of follow-ups, and again, reiterate, thank you again for the time and high level of where we're at in the process.
Very cool. All right. I think final question for you guys here today, and I think you hit on this question a little bit already, but I figured it's good book closing, I think, question is post-event, whether just in general or in this one in particular, after, let's say you went over your notes with PM and, talking amongst yourselves, what are some of the main things, or maybe specific to this one, after maybe talking to the PM after your notes, meetings and whatnot, what were some of the main things that the PM taught you, or you maybe learned from this trip that you're now going to implement maybe on future trips that you go on and doing on the ground due diligence? If at all.
That's a good question.
Yeah. It is good. I mean, I think, I'll kick us off quick and then we can go back and forth here. Not to be a broken record, but it does get to just that follow-up of continuing to identify and take note of myself of what were areas of follow-up that I didn't remember to ask in the meeting and try to better apply that going forward. And the PMs will do that as well, as they'll ask us, when we're highlighting the trip, they'll ask us, oh, did you ask about this thing or that thing or follow up more here. And, sometimes did. And then sometimes it's putting that in the bag as, okay, next time I'll make sure and cover that space with a future meeting.
I'd say something that stood out to me after this one is just the compounding nature of these interactions. So I kind of was thinking throughout James and I, when we both started within a couple of weeks of each other. So I think back to some of the first meetings that we did together and then sitting in some of these meetings after 4+ years. And I think just the value of getting the reps in, I think and that's kind of like to put a bow on it, is like, I don't think you necessarily have to go to Canada, but if you're running your PA and you want a career in investment management or equity research, find public companies in the city that you live in, and you're going to have a higher hit rate saying, hey, can I come have coffee with you at 8 a.m. on Tuesday, rather than can you hop on a Teams call? And you're going to get so much more out of that and prepping for that. Even if it makes you feel uncomfortable, that's going to push you forward than just kind of being like, hey, can we hop on a Zoom? I think that's the biggest thing, is that you can't put a value on the reps, and then that even if it doesn't feel like anything at the time, it's going to add to something when you're either talking to that team or the next company that you do get a gem from when you're in their offices. So I think that's like the biggest takeaway. You kind of blink and think, oh, not a lot happened on that trip, but then in like 6 months you'll be like, oh, that was so useful. We didn't even realize it at the time, but XYZ happened as a result of this.
I'll throw a little more out for this trip specifically. Being more up to date with the NHL and the finals there. I don't follow the NHL closely, but had a number of executives talking about from my understanding, one of the Canadian teams is in the finals here. So maybe I've done a little more groundwork on Canadian pop culture and sports references.
That's funny. Just James is on there. Is like, I'm pleased to report that the NHL Finals is actually happening.
Yeah.
Right. There's two teams.
I don't want that to speak against Minnesota. James is from Wisconsin, so
right.
Wisconsin and James can own that. But
yeah, that's a shame. I mean, Wisconsin? They got ice lakes there. What? They don't have hockey? What's going on?
It is funny that with Minnesota being so hockey focused and us being neighbors, that hockey is really a non-existent thing in the state of Wisconsin. Some of the biggest high schools have hockey teams, but outside of the 15 largest schools in the state, no one else really has a hockey team, which is interesting.
I'm in LA. There's no.
The Kings have been good at different times, but go Oilers for our Canadian CEOs or Western Canada CEOs.
You're trying to schedule a meeting at like 5 p.m. on Tuesday, and it's like, do you know what's happening at 5 p.m. on Tuesday today? I'm sure that came up. In
retrospect, that probably would have been the best way to get information. Is like, let's meet up at a bar, have a few beers, and watch the Oilers, and then we'll really get some insights. Yeah.
Not to give away too many of our fellow investor strategies out there. That's where they love. That's their favorite thing to do, is go take management to a bar and get them liquored up a little bit. And, then you get the real truth of like, our office sucks.
We have our own. From going to different conferences and things like that, different funny stories from the happy hour.
Yeah, we can share some stories at the next happy hour with you, Bobby.
Yeah, that'll be our next. That'll be our next one. This one's the on the road one, and then the next one will be the all right, happy hour. What goes on here?
Those will be like the lost tapes.
Yeah, right. I got a few of those too, man. They're quite candid. Anyways, dudes, this has been great. Where can our audience go and find more information, either to get in touch with you guys or, Punch and Associates?
Yeah, that is a great question. Should have had that prepared ahead of time.
Anybody watching the YouTube, they both went on their computers like, wait, what's our website right
now? What's the website again? There's probably like a general inquiry form that people could fill out on the website. My email is just first initial of my first name, spell my last name at punchinvest.com. Same for James.
Yeah.
Hit us up on LinkedIn or there or whatever. Happy to chat names, kind of across the spectrum. If you see we own it, or if you find an interesting microcap name you want to pitch us, we're more than happy for ideas and to connect with investors.
Very cool. And it's punchinvest.com. So
Yeah.
Anthony, James, this has been awesome. Thank you so much for joining me on this one. Hey, let me know the next time you go on another trip. We'll do this again. This was fun.
Yeah.
Perfect. Yeah, I really appreciate the time. Thanks, Bobby.
Thanks, guys.